head to the markets now. We're at intraday. The color remains red from the close of yesterday. Anita Edit has the details. Anita, good afternoon.
Yes, good afternoon, Ini. And well, it's a pullback. It's the bears that had it at the close of a midweek trading session, and the market made a pullback of about 0.16%. On Tuesday, the market had gained about 0.11%. Normally, we put this value in naira value, but in percentage points, we just look at it at the losses were higher than the gains that we had previously, and this is no thanks to profit taking on the likes of Zenith Bank, GTCO, as well as some other mid cap and some other smaller cap companies. So, but so for intraday, all right. So now to our viewers, the intraday numbers for African markets, starting off first with Nigeria, the Nigerian All-Share Index still at 31.23% year-to-date performance and a minus 0.1% month-to-date. But for intraday, it was down by 0.07%, which you see on the screen there, and still struggling in between that 97 and 98,000 points, where it has fallen all the way from that 100,000 points, which we saw earlier part of the year. But between the 97 and the 98, where you see here is just hanging by a thread. Anything can happen either ways, either on the upside or on the downside. But for the South African Johannesburg Stock Exchange, the JSE index, it was very much in the green, 0.26%. That's what they call a marginal, if not moderate, gain for the South African stock market. On the other side of the stock market, so across the African continent, we see Egypt, the EGX 30, making more than 0.5% gain at intraday, 0.54%, while the Kenyan Stock Exchange closed Wednesday session strongly. That was the biggest gainer, if you want to look at it, well, not at intraday, but at least for what we're tracking right now, the Kenyan Stock Exchange was up 1.54% at the close of Wednesday's trading session. Now, still talking about Nigeria's financial market, but this time we're talking about the fixed income market, and in particular, the Treasury bills market, where we saw NTB auction carried out yesterday in between the central bank and the debt management office. And then this time we also saw that the auction was oversubscribed, Nigeria's bond auction as well as the Treasury bills auction. When you, as a matter of fact, take into cognizance Nigeria's fixed income market always has a lot of attraction for investors. We saw an oversubscription. Investors there had offered a total of, the central bank had offered a total of 508.98 billion naira, but the subscription level was far higher by investors against what the CBN had offered across the 91-day, the 182-day, as well as the 364-day tenor. Now, for the last auction that the central bank had sometime in April, the CBN had offered about 2.68 trillion naira treasury bills, while investors staked 24.6 trillion naira in total, while actual sales was about 7.4%. So 4 billion naira. So we saw that oversubscription still continuing. Now, to give us more details about that, as well as the bond, other markets, let's bring in Miriam Yunusa Yakubu, financial market analyst at Chapel Hill Denham, with the details. Thank you for joining us, Miriam.
Thank you for having me.
Okay, so my first question. Why is Nigeria's stock fixed income market being so attractive? At some point we saw a law, but now what's driving this attraction?
Okay, so at the NTB auction last week, yesterday, we saw oversubscription across the 182-day and 364-day maturity, and we saw the bid to offer ratio for that at 3.5 times and 8.5 times. And this shows how investors are trooping to the fixed income market as a result of higher yields in that space. However, we believe that the market has not fully absorbed the impact of the 150 basis points hike, as the stop rate for the 364-day maturity was 20.69, which is 1 basis point lower than what we saw at the previous auction. What we believe is that the CBN will have to come to the market to issue OMO at the standard 21.5% in order to provide a rate direction for the market. We believe that after this has happened, we will see that the market will correct itself.
So now that's for the fixed income market, but let's talk about the equities market, which moves sometimes in inverse proportion to the fixed income market. We saw that pullback. So what is driving this pullback? Is it profit taking or other factors to be considered?
We would say that the pullback is a result of the twin effect of the higher yields at the fixed income market, as a result of and also the sell-offs that we're seeing in the equities market, especially in the banks like Zenith and GT Bank. Intraday, the market is down 13 basis points. Across other sectors such as the consumer goods and the industrial, it's closing flat. This is as a result of the banking capitalization that, there's sort of uncertainty around it. So it's a twin effect of the higher fixed income yields and as a result of the sell-offs in the equities market.
Okay, Miriam, so I think we'll leave it there. And of course, we at intraday, but we'll look out for how the numbers close for Thursday's trading session. But thank you so much for your analysis on our show.
Thank you for having me.
Also, Miriam Yunusa Yakubu, financial market analyst with Chapel Hill, Denham. Now let's move from Nigeria, from Africa to the Middle East, where we see negative sentiments still pervading the market. Across the board, United Arab Emirates, the two indexes on that exchange, Abu Dhabi and the Dubai FM, both in the red. There's 1.06% for the Abu Dhabi and 0.75% for the Dubai FM. On the other sides of that market, of the Middle East market, we see Saudi Arabia almost 1%, 0.93% for the Tadawul, the region's biggest economy, still having so much concern in the midst of oil prices as well as some other factors. Earnings report, Q1 earnings report. This is the last lap for some companies that will be reporting their first quarter earnings. So maybe that's part of the reasons why these markets are in the red, as well as the Qatari Stock Exchange, where we see it down 1.12% at intraday. And from the Middle East, we go over to the United States, where we see strong performance being largely driven by the shares of the shares of chip making giant and artificial intelligence darling NVIDIA, which rubbed off on the market, particularly on the NASDAQ here, where we see a 0.84% increase on that market index, while the Dow Jones Industrial Average, the 30 stock index, was 0.09% at well for futures. We might not call that intraday, but it's well before the market opens Nigerian time at 2:30. The S&P 500 was up 0.50%. Now overnight we saw that stocks on Wall Street had dropped. That's on Wednesday after minutes from the Federal Reserves. That's from the U.S. Central Bank had fueled concerns over sticky inflation within the world's biggest economy, and then fears that the central bank, that's the Fed, may not cut off their interest rate, which is widely expected sometime in the month of September. So concerns over inflation is what played into the minds of some investors. But we'll look out for how the market would end for Thursday's trading session. But in terms of Q1 earnings season, which is gradually rounding up, the US Wall Street will be expecting Q1 results from Ralph Lauren, BJ Wholesales, as well as Workday and more. But for the economic front, investors are waiting weekly jobless claims as well as the new homes sales data for April for the world's biggest economy. So that's for the US stock market. And lastly, for the Asian markets, we see a bit of a mixed picture there. They're also tracking some of the concerns of the U.S. Federal Reserve about the issue of inflation for the U.S. economy. We saw Nikkei being in the green, it climbed back to 39,000 points, although it had hit 40,000, but thankfully it's back in the 39,000 region. While the South Korea's Kospi, it was down in the red. And this is coming as the country's central bank, that's the Bank of Korea, held its benchmark policy rate at 3.5%. That's in line with the market estimate. Meanwhile, the BOK is expected to cut the interest rate by about 50 basis points in the fourth quarter. So that's about 2 quarters from now. But for the close of Thursday's trading session, this is how it turned out for the Kospi, as well as the Hang Seng Index, very much in the red, 1.70%. For the other two sides of the market, the Shanghai index 1.33% down, while the the Australian ASX 200 index in the red, 0.46% for Thursday's close. So that's it in a nutshell for the market at intraday and for Thursday.
Yeah, well, Anita, I think one thing that stands out affecting most of the market is that Fed meeting that came out yesterday, and now we see that there's a shift. First, we're expecting interest rate cuts in June for the United States, then move to September. And now some of the traders are actually looking at November. Perhaps we'll have, and that's perhaps at this rate, there'll be one rate cut this year, 2024. And obviously every market is receiving the impact.
It's all eyes on the US, and that's the world's biggest economy, because when the US sneezes, the rest of the market catch cold, particularly across the Asia and the European markets. So that's it. So that all eyes for the US inflation and interest rate expectations.
Yeah. Thank you so much, Anita.
Pleasure.